So welcome back to another episode. Today we're going to take a closer look at two AI server players that are getting a lot of attention right now, obviously because of the demand for AI server solutions. So we're going to take a closer look at Dell Technologies and why would maybe someone want to buy it over Supermicro. So that's obviously the second stock, Supermicro, and we can see both stocks year to date have done amazing. Year to date for Supermicro, the stock is up over 195%. Year to date for Dell Technologies is up roughly 80.4%. Now, both have seen some form of pullback from its 52-week high or from its year-to-date high. We can see Dell is down roughly 25%. Supermicro is around the same ballpark. Year-to-date, the stock is down roughly 29%. So as both these companies are down, we're going to take a closer look at a lot of things: revenue growth, earnings per share, and some other fundamentals. So let's take a closer look in today's episode.
I want to thank The Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for the subscription service. Now, let's continue with today's episode.
All right, so first let's kind of start off with just typical PE ratio, and this is from historical values right now. We can see Supermicro is almost 2 times more expensive than Dell Technologies when we look at PE ratios. PE ratio for Supermicro is 47, while Dell Technologies is 27. Now, it is important that Supermicro, we're going to see, is growing at a faster level, and that could be the reason, and that actually is the reason why Supermicro is more expensive looking at current valuations. Now, if we look at PE ratio forward, which is the end of this fiscal year, it is important to know that Supermicro ends this fiscal year in this upcoming quarter, while Dell Technologies still has 3 quarters to go. But even with that time lapse, we can see that Dell Technologies is still way cheaper than Supermicro. Now, if we look at forward 1 year, which is the end of next fiscal year, we can continue to see that, hey, look, Dell Technologies is cheaper than Supermicro. But on the bright side, we are seeing that Supermicro, that gap between them is getting smaller and smaller, and Supermicro starts to get a little bit less overvalued when looking at numbers. And again, it's because of the revenue growth and the earnings per share growth that Supermicro is expected to see. Now, if we look at things like gross profit margins, Dell Technologies does tend to have higher gross profit margins. Both of them are kind of flatline-ish. They're not really moving. Supermicro is closer to 16%, where Dell Technologies is closer to 23%. So the hardware market is definitely one that they're going to be fighting a lot for gross profit margins. What is important to know is Dell Technologies does have a lot of other plays outside of the hardware space, which can help them elevate their profit margins, where Supermicro is playing a lot in the hardware space, so their profit margins stay to be more in line with everything else. Now, if we take a closer look at profit margins, Dell Technologies' profit margins is sitting at 4%, while Supermicro continues to grow and is growing at 8%. So we can see Supermicro is growing its profits at a lot faster level. So that's definitely a nice bullish point for Supermicro over Dell Technologies.
Before we go any further, we are now on the road to 50,000 subscribers by the end of the year. Thank you all for the crazy support. So if you haven't and are enjoying the content, make sure to hit the thumbs up and the subscribe button. Finally, if you want to support the channel a little bit more, make sure to check out my special offer at fool.com/Jose. Now back to today's episode.
Now, if we take a closer look at their overall balance sheet, Supermicro, we can come here. It looks pretty strong. Let me pull up Dell as well, and we can put panel per security. So Supermicro, $2.1 billion in cash and short-term investment, $1.8 billion in total long-term debt. So bullish that this company does have more cash than short-term investment. Unfortunately, this company is buying as much inventory as it possibly can. So cash from operations in the trailing 12 months is almost down $2 billion. But that's because this company continues to use its capital to reinvest and buy more GPUs and more inventory. Now Dell Technologies is a little bit different. While their cash and short-term investment is much lower than total long-term debt, they do have plenty of cash from operations that allow them to continue to reinvest that money wherever they need. So even though their balance sheets are a bit different, I do believe both of them are strong because Dell, while it has more debt, does have more cash flow from operations coming in. Now, if we take a closer look at revenue estimates, we can see that, and I'll show the projections in a bit, but just from looking at the graphs, we can see both these companies are expected to grow dramatically in revenue for the upcoming 3 fiscal years. We can see Dell Technologies this current fiscal year is expected to end at $96 billion. In the next 2 fiscal years, is expected to end at $110 billion. Now, Supermicro, much smaller, expected to end this current fiscal at roughly $15 billion, and next 2 fiscal to be around $28 billion. So we can see huge growth, and we're going to look at the percentage. Now, if we take a closer look at earnings per share estimates, we can see that both these companies for the foreseeable future are expected to continue to see that growth in earnings per share. So we can see in current fiscal year, Supermicro's earnings per share is going to be $23.78. That ends in about a quarter from now. Now for next fiscal year, which is about 5 quarters from now, that earnings per share is expected to grow to 33.73, which is a roughly 42% growth compared to this current fiscal year. And then after that, it's expected to grow another 24.3% of what analysts are expecting in forms of earnings per share growth. Now, Dell Technologies is also expected to grow at interesting numbers, 20.7 next fiscal year, and then 16% the one after that. But we can see that Supermicro is growing at a much faster level. Now, if we look at 2 fiscal years from now, Supermicro's PE ratio ends at roughly 20.1. So nothing too crazy, but that's about 9 quarters from now. So if you're looking for that growth mentality, Supermicro definitely seems pretty interesting. And maybe if you can, and this is based on the price of $844. I personally would say if Supermicro may be closer to $700 would be, in my opinion, a nice risk to reward buy opportunity. Now, obviously, Dell Technologies at 135 looks very cheap, as though those PE ratios tend to drop to the low teens. But remember, Dell is not growing its earnings per share as fast as Supermicro. Now, if we take a closer look at revenue estimates for next fiscal year, Supermicro is expected to grow its revenue roughly 58%, following by 19.3% the following one. Now, if we take a closer look at Dell Technologies next fiscal year is only expected to grow 7.5%, and the year after that be 6.2%. So this is why investors are giving a bigger valuation to Supermicro, and nothing too crazy, right, compared to Dell Technologies. Now, for me, like I mentioned in the past, Dell Technologies is not a company or Supermicro that I would personally invest in, because they do play in that hardware space, which to me doesn't have too much of a strong moat. But if Supermicro maybe drops to the 600s to the low 700s, that might change my thought process a little bit more, especially since we hear from NVIDIA that the AI server market is going to continue to boom as we continue to see huge growth in data centers. Eventually, we're going to have million server data centers running in the world. So obviously, that bodes really well for Supermicro. That bodes really well for Dell Technologies. Now, I did cover Supermicro about a week ago, where I took a closer look at some of the solutions and why Supermicro is growing at such a fast, rapid pace. So make sure to check it out. But for me, if I was to pick one over the other, I think Dell Technology is definitely that play if you want to do a little bit of AI server, a little bit of other software solutions that Dell Technology offers. Obviously, they also hit kind of the PC market and all the other kind of hardware spaces. If you're looking at purely AI servers, then Supermicro is probably the best play to go there. But remember, the hardware market is one that's very competitive, as we're going to see companies are going to fight with this over margins, and margins could get very small. So that's one of the big risks there. And like I mentioned, Supermicro has had a nice run up in the past 5 days. But in those $700, low 700s, maybe high 600s, this would be very attractive in my opinion. So I hope you guys enjoyed today's episode. Take care, have a good day, and see you all next time.